morning and welcome back to another Tax Tip Tuesday here with Sarah Berry CPA in Texarkana, Texas. And today we have joining us Melissa Bradford. She is a CPA on our team. So today we are going to be talking about a tax saving strategy for small businesses. This strategy does not necessarily result in thousands of dollars in tax savings per year like some of the other tax saving strategies we've talked about. But this one is actually fun. I know it's hard to imagine that taxes and talking about taxes can be fun, but today it will be fun.
So, Sarah, I know a lot of people who are small businesses probably are already aware that there are some fringe benefits that they can deduct tax-free, such as if they have an employee who recently graduated from college or had a baby or an illness in the family, you can send them flowers and baskets tax-free. But what many people probably don't realize, with a fun twist, is that a lot of people have their spouse as an employee as well, and they can actually send these same items to their spouse or even to themselves and still get a tax-free fringe benefit from that.
That is so cool. So let's say that my husband and I are in business together. So he could actually send me some flowers for my anniversary and get a tax deduction for that.
He sure can. Absolutely.
Very
Your birthday.
Good. Cool. I hope he's taking notes.
I know.
So a couple of weeks ago, we talked about the tax saving strategy of income shifting income over into a lower tax bracket and how that saves you on income tax dollars. So today, this particular strategy we're talking about falls into the category of making otherwise non-deductible expenses deductible. So let's say my husband were to send me flowers for our anniversary and he pays for that out of our personal checking account. Never crosses his mind that this actually could be a business deduction because we are business partners and we are both employees in the business because it is a partnership. So this is taking otherwise non-deductible expenses and turning them into a tax deduction, which is a very cool tax saving strategy. So Melissa, is there anything specific about this strategy that we should know about in order to not get in trouble with the IRS?
Yes, two basic rules of thumb. The IRS wants you to follow a value limit and a frequency limit. However, the IRS is still very vague on what that value and frequency limit is. So, rule of thumb, if you stay around or under $70 per gift, you should be safe. Okay. And as far as frequency, again, use common sense. You know, this isn't something you should do every day. Maybe not even once a week, but just common sense will guide you on that. Also, the IRS does not allow gift cards. If you wanted to send your spouse a gift card to the same flower shop or the same candy shop, that's not allowed because the IRS considers these gift cards to be cash equivalents, and those are outside the perimeters of tax-free fringe benefits.
Okay, very cool. So I couldn't send my husband a Texas Roadhouse gift certificate for our anniversary and get a deduction for that, right? And I also could not give him cash. That would be considered income to him if I took it as a deduction to myself.
That is correct.
But I could give him a decorated cookie cake or something like that.
Mm-hmm.
That would be okay.
I sure can.
Very good.
Mm-hmm.
Thank you for joining us today for another Tax Tip Tuesday. And while this tax tip may not generate thousands of dollars per year in tax savings, I will say this, you are sure to see a very large return on investment from these expenses because it's always a good thing to invest in your marriage, in your employees, and in relationships in general. Thanks so much for watching and join us back next week.